we have the first advance estimates for GDP for the current year, and the NSO has pegged the growth at 7%. This is a little better than the 6.8% that the RBI is working with and the 6.9% that our poll indicated. So the NSO is a little more confident of growth. The GVA is coming in at 6.7%, and I think our poll had a slightly lower number of 6.6%. So just a minute. Well, the full year GDP number coming in at 7% is a little better than what we were expecting, what the poll threw up. More importantly, we have to look at the nominal GDP. The nominal GDP is expected to grow at 15.4%. This is almost in line with what the CNBC-TV18 poll said. The poll said that the growth will be about 15.8%. So it's almost in line, just a little lower, the nominal GDP. Now, remember, the budget had expected the nominal GDP to grow by only 11.1%. to 258 trillion rupees. At 15.4, the GDP will come to about 267 trillion, which means the government has a little more leeway when it comes to the fiscal deficit. The fiscal deficit can increase by about 50,000 crore rupees. Compared to the 16.6 trillion, they can go to about 17.1 trillion. That is the advantage of the nominal GDP being higher than what the budget estimated. The government is estimating it to come in at 15.4 trillion. Now, other growth numbers, 3.5% is the growth in agriculture. Our poll had forecast 3.8%, so mildly lower than that. The manufacturing sector is expected to grow by 1.6%. Our poll had thrown up only a 0.4% growth. So clearly, manufacturing is expected to pick up in the last quarter, according to the NSO. Construction sector expected to come in at 9.1%. When private final consumption growth is expected to come in at 7.7%. Our poll was much more positive, expecting a 10.5% growth. Government consumption, 3.1%. That's exactly what our poll also threw up. Capital formation coming in at 11.5%, according to the NSO. And our poll came in at, I think, 10.5%. So pretty close from what the street was expecting. Only a little better as far as real GDP is concerned, and marginally lower when it comes to nominal GDP. Those are the numbers so far. We will keep updating you as we go along. Let's get to our experts first. We have Devendra Pant, the chief economist from India Ratings, joining us. And in a minute, Dr. Pronab Sen, the former chief statistician, will also be with us. Okay, Dr. Sen is with us. And Abhishek Upadhyay, the economist from ICICI Securities, PD, will also be joining us. Good evening, gentlemen. Thank you very much. Dr. Sen, 15.4, people were expecting closer to 16% growth in nominal GDP. Your first thoughts, 7% and 15.4, real and nominal.
7% is pretty much along expected lines. And but again, I think, Latha, something that our viewers should know. What this implies is that the growth in the last half of the year will not be very much higher than 4.5%, a little bit higher than that, right? But as far as 15.4% is concerned, I think the NSO is expecting inflation to come down faster than even possibly the RBI has.
Okay,
So,
yes.
I think there's a little bit of optimism built into that.
But there would be a lot of WPI inflation that goes into the nominal GDP, right?
Well, but you know, WPI inflation, in fact, has come down very sharply. But clearly, they don't expect the CPI part of it to come down.
Yes. So you think there is an overestimation there?
No, in fact, if anything, probably a mild underestimation.
Okay. So you expect that the actual nominal GDP could be a little higher. We could expect maybe 15.8, 16%. Okay, that would be a pleasant surprise for the government, but those actuals will come much later. Your first thoughts, Devendra Pant, 15.4 in terms of nominal GDP. Where do you stand? And the real GDP at 7%, is that an overestimation?
Latha, as Dr. Sen said, it's more on the expected line. We were expecting, say, 10 basis point higher than what was our estimate. We were expecting it to be at 6.9%. And when you look at the nominal, yeah, if I look at what Dr. Sen has just said, maybe there's slightly underestimation. Our estimate of nominal GDP was much higher at 16 and a half or so.
Okay.
Probably what has happened and where the RBI and maybe NSO's inflation numbers are differing. Sorry. When RBI gave that number, they had only number up to October, inflation number till October. And what NSO is doing, they had number up to November.
Yes.
And whatever estimate you use, the statistical model and all those, it's the end period bias and how sharply the inflation uptake or downtake has happened in the last, towards the last end of the period. That will be reflected into the forecast.
Okay.
So that would probably one reason why the NSO is expecting inflation to go decline sharper than or the faster than what RBI is behaving.
Okay.
But Latha, I think more than 23, it is what 24 is in store for us.
Okay.
That is more crucial question
absolutely.
at this juncture.
Oh, absolutely. But just to put our viewers up to speed, the expectation from the budget was that the current year's nominal GDP will be 258 trillion. What the NSO is telling us is that it will be 273 trillion at 15.4% higher. So that gives a little more elbow room for the government to spend on the fiscal deficit. The government was aware of it and it has already probably overshot or probably used up that space. But the extra food and fertilizer subsidies would probably account for the higher. Their deficit can increase easily by about 70,000 crores. Abhishek Upadhyay also has joined in. Abhishek, 273 lakh crore is the estimate of nominal GDP by the year end on March 31st. How much elbow room in terms of fiscal deficit does it give the government?
Well, Latha, so the number is quite close to our expectation of nominal GDP growth. We were thinking about 15.6%, so it has come close. This should give about 95,000 to 1 lakh crore of additional room to government to run a higher absolute fiscal deficit, even if they want to maintain the same deficit in percentage of GDP terms. So that much is the leeway. And all signs are that this leeway will be utilized by the government also.
Okay. Well, let's look at the individual components. Agriculture is expected to grow by 3.5%. Now, that is real GDP. Manufacturing is coming in at 1.6%. Very few people gave us such a strong manufacturing number. In our poll, a lot of people actually saw manufacturing contraction. Abhishek Upadhyay, 1.6% manufacturing growth looks overestimation?
Yeah, we were thinking a number closer to zero or perhaps negative also. So the number is higher. So there could be some downside risk there. At the same time, overall real GDP growth number is in line with what we thought at 7%. So there could be some shift in internals when the revisions come up, and typically meaningful revisions happen around provisional estimates. So there could be some change in internals, but overall number 7%, which implies about 4.5% GDP growth in the back half of the year, is in line. The only caveat I will point here is, the interpretation generally is 4.5% growth is very weak. It is not so because in each of the previous two fiscal years, in the back half of the year, growth was very strong because the incidence of pandemic and lockdowns, etc., was more spread out over the first two quarters. So 4.5% growth understates the kind of growth momentum that is required to achieve 7%. So there could be some downside risk there still, but overall number is in sync with our view.
Okay. Private final consumption expenditure coming in at 7.7%. We had got a much stronger estimation. The total comes to about 90 lakh crore. It looks like a fairly strong number at 90 lakh crore. Abhishek, any thoughts on that? Private final consumption expenditure?
Yeah, so consumption expenditure, typically, there are the widest uncertainty bands around that estimate. I prefer to look at the GVA subcomponents compared to the expenditure side subcomponents. And on that side also, the trade hotels number looks reasonably high. It is possible we could get those numbers. Some of the high frequency indicators such as GST collections, etc., have held up. But at the same time, what you hear from FMCG companies is that rural demand has been weak, etc. Right? So mixed news on consumption front. My overall view is consumption should be resilient despite some headwinds as we enter next year. That is assuming inflation is lower. Next year, which should be a key tailwind to at least the rural part of the economy, which has been hurting so far.
Okay. Dr. Sen, your thoughts, sir. Again, trade, hotels, transport and communication coming in at 13.7%. That's the estimate that the government is giving. Do you think that can be a disappointment, that we may not get that good a number? We have heard about rural slowdown in the third quarter. Lately, we had even Bajaj Electricals today. A lot of people are worrying about consumer discretionary spend in urban areas itself. Post Diwali, apparently the lull is much more intense than it has been in pre-COVID times. So is there an overestimation there?
On trade hotels and restaurants, perhaps not. This is precisely the sector which has actually been driving the economy for the past 7-8 months.
Okay.
So, that doesn't surprise me too much at all.
Okay.
I'm perfectly okay with that. The consumption number, on the other hand, does surprise me a bit.
Okay.
I think it's a lot stronger than I would have expected, simply because of the problem with rural demand. And what this is saying, in effect, is that urban demand, urban consumption is going up much, much faster than what we had expected.
Okay. Well, there could be a disappointment there if you go by the anecdotal data that we are getting from corporates for the third quarter. But Devendra Pant, as you pointed out, I think the bigger question now is what kind of assumptions can we run with for the next year? Because after all, this is the first step to the budget building. What would be a legitimate nominal GDP forecast on this 273 lakh crore that the economy is expected to reach by March 31st? What should the budget assume?
Well, Latha, if we look at the way the inflation trajectory has been, and especially the movement in the month of November, and if we look at that and try to project based on that, what will be the WPI inflation, we may see a situation of deflation coming in later part of first quarter and most of the second quarter of FY22. So as we had seen earlier, we may have a situation, the second quarter nominal GDP growth may be lower than the real GDP growth.
Okay.
Now, if that kind of situation prevails, then it may be the GDP deflator could barely grow or grow even 2 to 3%. If we are growing, GDP deflator is growing at 2 to 3%, and the real growth, which is expected to fall or decline to the trend growth rate of 6%, so somewhere around 5.5 and 6, we may be staring at a situation that the budget is looking at, or the realistic nominal GDP growth could be even 9% or maybe lower.
Okay, so single digit.
Now,
okay.
biggest issue here is the inflation decline which we had in November, both on CPI and WPI side. Is it likely to continue in future? So 12th January WPI and 12 January CPI and 14 January WPI number will be very important which will give you some direction whether it was a blip of the sharp decline in inflation in November, or the December number also shows the same trajectory.
Dr. Sen, isn't the nominal GDP much more dependent on WPI? I mean, the deflator more dependent on WPI than CPI?
It's about 60% depends on WPI and about a little under 40% is on CPI. So
and
the real question, I think Devendra is right, that the WPI trajectory is very weak, but CPI continues to be up there. And so much is going to depend on what's going to happen to agri prices.
Okay. But,
which has really been driving the volatility.
Okay. So do you think that, WPI could go down to very low single digits, maybe 1% and 2%? And therefore, what should the assumption be? Should the government go with a 10% or a 9% assumption, as low as that for next year?
Well, again, let's look at it. If WPI is hanging around somewhere, let's say between 2.5%, I don't see CPI coming down to anywhere below 5%. So if you take a sort of a weighted average of that, what you are getting is about 3.5%. So 3.5% plus 6%. So you're talking about 9.5%. Stretch it a bit, 10%.
Okay. So if the government were to assume anything more than that, then it would be a little something that the street may not take very kindly to. Abhishek, what would you say should be the nominal GDP assumption for the budget?
Well, we are working with assumption of 10% growth next year. I agree with other panelists that the risk to this number would be towards a lower estimate. We need to recognize that while real GDP growth is trending comfortably below the pre-pandemic trend line, that is not the case with nominal GDP growth because commodity prices have been higher, WPI inflation was high, and nominal GDP growth has been very strong. So there is that base effect which will play a role, and actually commodity prices are also softening. So the double whammy of that will have some impact on nominal numbers. So I agree. I mean, the challenge next year is to achieve fiscal consolidation despite perhaps limited tailwind from the revenue side. But there is scope to do that because currently tax revenues are anyways above pre-COVID levels. It is the expenditure levels which are much, much above what was the case pre-COVID. So it is expenditure retrenchment which needs to drive any fiscal consolidation next year rather than higher revenues.
What is a good tax assumption for next year? Should it be 10%, Abhishek?
Yeah, I mean, so typically you assume very close to nominal GDP growth. Indirect tax especially will move very closely. On the direct tax front, of course, I mean, theoretically, you would think there is, mixed relationship because input price pressures will ease. That should help corporate margins. Therefore, so direct taxes, will still move in line with indirect taxes, but yeah, clearly lower nominal growth will have a bearing on indirect tax collections and overall tax collections.
Okay. Dr. Sen, what in your estimate would be a good tax assumption? And will the government have a problem trying to reduce the fiscal deficit because the nominal GDP and the tax assumption cannot be very high?
Latha, it's the overall level of GDP certainly is important of growth. But what is also equally important is its composition. And if the assumption that is being made is that the current balance between the different sectors remain, then what Abhishek said is roughly right. But if, on the other hand, we expect the MSME sector to actually lead the growth process going forward, then your tax collection may be significantly lower, simply because the extent of tax compliance among the MSMEs is lower than that of corporates.
But why would you make the assumption that the MSMEs will suddenly do better?
No, I'm hoping they will.
Okay.
I'm not making the assumption.
Okay. But
at the moment, we're all making the assumption that the corporate-led recovery is going to continue.
Okay. So you would say...
Which does not bode well for employment.
Oh, yes, I take your point on that, one would want it to be labor-led and therefore MSME-led. But all we have is now a nominal GDP number for the current year, which is 273 trillion rupees. So, Dr. Sen, what would your best guess be, or what should be the right guess in terms of the nominal GDP for next year? Should the government run with 300 trillion? You would think that's a fair assumption. And therefore, over 300 trillion, what should the tax assumption be?
I would go with around 300 trillion, with a tax assumption of being a shade below the 10% nominal growth we are talking about. I would say you should have a tax assumption of somewhere around 9.5.
Why should it be even less than the nominal GDP growth assumption?
Because that's what usually happens in normal circumstances. What we've seen in the last couple of years is actually somewhat extraordinary.
Oh, okay. So you think that impact will wear away and we have to run with perhaps a lower tax assumption. Would you say that a good budget would be one that cuts the fiscal deficit? The government's stated target is to reach 4.5% by FY26. So logically, it should be at least a 60 to 70 basis point lower fiscal deficit. And that would mean, 5.8% at least for the FY24, for the coming year. Is that what you want them to do? Would that be the ideal budget?
As of now, yes. I mean, somewhere around 5.8 would be, I think, the right target going forward.
Oh.
And as you rightly said, most of this will have to come from curtailing expenditures.
Okay. Go ahead, sir.
They shouldn't assume, large growths in taxes just to make the budget balance.
Okay. So that works out to, I think, about a 17.5 lakh crore of fiscal deficit. Anything more than that would be taken badly by the market, you think, Abhishek?
Yeah, so market is, there is quite a bit of consensus that fiscal deficit should be around 5.8, 5.9% of GDP. Government has already communicated that over 3-year time frame, they want to reduce overall deficit by about 1.9%. So you would expect 0.6% roughly each year. And given fiscal deficit is so high right now, and there is a lot of scope for expenditure retrenchment, particularly on the unproductive expenditure components, at least about 0.6% should be par for the course. Anything higher will definitely be concerned, but I don't see much upside risk. If fiscal deficit this year is for some reason below 6.4%, then you could get a fiscal deficit number which is perhaps a little lower than 5.8 rather than higher. So higher number will certainly be a negative. Because overall gross borrowing number this year will be, next fiscal will be higher than this year. And we are not anticipating much by way of monetary policy easing RBI. So lower fiscal deficit will be good. But there is limited uncertainty this time around what that deficit number will be.
So 17.5 lakh is what you would go with?
Yes, somewhere there, yes.
Okay, somewhere there, yeah. Dr. Sen, final thoughts. Do you think 7% is legit? You think the advanced GDP numbers are not throwing any surprises?
No big surprises except for agriculture. All of us have a hard time believing that the agricultural sector is growing at 3.5%.
Okay, you think it would be much worse?
It should be worse. From all the accounts that the government itself has released, it comes as a surprise.
Okay. Well, I did get assumptions higher than that also from the street, so we'll have to wait and see. Actually, it is manufacturing where the assumption is higher than what our poll threw up. But overall, all of you are in agreement that the assumption is in line with what all of you were estimating. Thank you very much, Dr. Sen, Dr. Pant and Abhishek for joining me and making sense of these numbers. The numbers largely in line. The government should assume a 300 trillion GDP next year, and we will have to see what kind of tax assumptions and fiscal deficit assumptions come in. But the fiscal deficit wriggle room definitely will be less next year because the nominal GDP growth is expected to be much lower because of a lower inflation number. With that, we wrap up this special broadcast on the state of the economy and the advanced GDP numbers. Thank you very much for watching. More news and highlights are lined up for you.